Let's get back to those results from Alphabet. Ed Ludlow now joins us, the co-host of Bloomberg Technology, and he just spoke to CFO Ruth Porat. What did she have to say, particularly about this big beat in search? Because as our own Bloomberg Intelligence and Mandeep Singh point out, there were some skepticisms that this could continue this strong.
Yeah, I mean, Porat went to her kind of go-to phrase, which is resilience in search. Search and the advertising market generally, it's going to be difficult to get a health check on that until the call. And I'm sure she'll go into more specifics. I think, Alphabet doesn't give sort of very rigid guidance, but very careful with her words. Porat did say that their testings, the word she used, is showing that, bringing Gemini, the latest AI model or generative AI tool to search, the testing showed that it's driving increased use. And those little nuggets, those little pieces kind of answer the question, which is, for all the investment, when are you going to start seeing sales growth directly from the AI work you're trying to implement? And that's as much evidence as we're going to get at this stage.
So clearly a big beat across the board, search being a huge part of that, Ed. But I'd say one of the bigger surprises is this capital deployment and the buyback dividend growth that has kind of shocked many. Talk to us about that decision. Why now?
Surprised, Gina? That's been in vogue. It's not even an original idea at this point. I mean, for Alphabet, it is their first ever divvy. It's interesting because investors, look at the after hours trading. I think the divvy and the expanded buyback's a big factor in the after hours performance. You guys had Brent Till on the show last segment, right? Earlier today, when I spoke to him, he accused Alphabet of being the least investor-friendly tech company in the world. Well, a divvy and a buyback is pretty investor-friendly. And Porat's response to his statement, by the way, was, "We appreciate the feedback."
Well, should she say anything else about that too? I mean, is the results themselves kind of a affirmation that what he's saying might not be the case in the future?
Yeah, look, what she said a bit more expanded was that they think about capital allocation and capital strategy constantly, not just on the shareholder returns. Clearly they've moved on the divvy and that's being welcomed, but they also have to think very carefully about expenses and basically resource allocation, right? This has been a story for Alphabet. They've had to cut back in some areas to put on the priority, which is basically cloud. So go to the cloud growth, 28% year on year in the quarter. And, again, this isn't a company that gives us very formal guidance, really, in the same way that many of the other mega caps do. But the commentary on cloud that she gave me was, AI played a really big part in this quarter gone, and that generally the market across all the subsectors and industries they sell cloud to showed strength. But look at the first part of that sentence. So, as it relates to where they're spending, they clearly feel confident enough to return, to give shareholder returns while they are also in investment mode, right? They have to continue to invest in the infrastructure that's allowing them to scale the cloud-based AI offering.